Welcome back to the Tuesday Target Audio Companion. I'm running point today alongside.
Me, Penelope, and we've got a fun one. Yuri's letter this week has a title that actually made me laugh out loud. Iran's 40-year bluff just expired.
The framing is wild. Everyone's been watching the headlines about Hormuz, oil spikes, ceasefire deadlines, and Yuri just walks in and flips the whole story upside down.
Right. So the mainstream take is Iran closes the strait, the world panics, oil rips, stocks crash. Classic blackmail geography. And for 40 years, that was the insurance policy.
Exactly. Every Western capital priced it in. Every strategist bought the pitch. And then Iran actually pulled the trigger this time.
And found out the rope was tied to their own neck. I mean, look at the math. 90% of Iran's crude exports go through that 21-mile stretch of water. 60% of their government revenue.
Meanwhile, the U.S. just happens to be the world's largest oil and LNG exporter, outproducing Russia and Saudi Arabia combined.
So Tehran is bleeding $300 million a day, and Washington is basically shrugging.
The Chokepoint chokes its architect. I love that line.
And here's the part that really got me, China. Beijing was the loyal discount buyer, feasting on Iranian crude at $10-12 below market, piping it straight into their plastics industry.
Now that pipe snapped. They're paying Arabian light premiums. Their petrochemical factories are suddenly dependent on American ethane shipments.
Gas at $5.60 a gallon against a $17,000 average wage. She walks into the May summit with Trump holding a pair of twos.
Geography stayed the same. The leverage map got rewritten overnight. Okay, let's shift gears, markets.
The Nasdaq streak finally broke, 13 sessions up in a row, longest since 1992.
And Yuri's point is, that kind of run usually resolves higher 12 months out, but the near-term digestion is going to get messy. Call volume records, dealer gamma flipping short on any further rally, skew collapsing.
Translation for the non-options crowd. Everyone piled into upside bets at the same time. That crowd is now the setup for the pain.
Then there's the Apple story. Tim Cook is out September 1st. John Turnus takes over.
And Yuri's take is beautifully brutal. Under Cook, Apple went from $350 billion to $4 trillion, a 10-bagger, but revenue only 4-bagged.
Meaning the rest came from buybacks. The machine was optimized for share repurchases, not invention.
So now the hardware lifer inherits a company coasting on brand prestige. The question is whether he actually innovates or just keeps the repurchase authorization humming.
Which is a very Yuri way of saying, Apple hasn't had a real new idea in a decade.
Okay, Wall Street bull trap chorus. Goldman's top desks and Bank of America's HeartNet all calling a top in the same week.
And Yuri flips it again. When everyone's calling a trap, the trap usually waits. The rally typically extends just enough to burn the late shorts before the real crack.
Contrarian to the contrarians.
Exactly. Then retail got some regulatory rocket fuel. FINRA just killed the $25,000 pattern day trader minimum.
With SEC approval. Overnight, a huge pool of smaller accounts can now day trade without restriction. The meme ETF is up 56% off March lows.
And institutional desks are completely ignoring it because they're still buried in their macro models.
Classic. Last big theme, software. 6 weeks ago, people were writing its obituary. AI disruption, margin compression, game over.
Last week, IGV rallied 14%. Goldman's analyst is now arguing AI natives are actually expanding the software market, occupying the white space between traditional SaaS silos.
The squeeze phase may fade. The re-rating phase might just be starting.
All right, this week's schedule. Retail sales and the Warsh confirmation hearing today. Tesla and the ceasefire expiry Wednesday. Global PM is Thursday. Michigan sentiment Friday.
Fed's in blackout before next week's FOMC, so every data point gets filtered through the rate cut lens.
Tactics for this tape. Stay flexible. Pair long tech exposure with cheap downside protection. Implied volatility reset makes hedges affordable again.
Trim the squeeze chasers, add patience.
And the Tuesday target trade this week is AST SpaceMobile, an iron fly structure.
Full reasoning in the letter. Worth the read, Yuri breaks down why, when a failed rocket mission can't even crack the share price, the real pain trade sits above.
Go read it. Go study it. Trade it if it fits your book.
That's your Tuesday target. See you next week.
Stay sharp.